Hey, it's Mac with PriceActionTradingSystem.com, and it's Tuesday. It's July 9th. This will be our chart lesson for the day, and it's a pretty easy day, pretty straightforward. There's not a lot of trades here, but this is about as easy a day as you can get. It's not real fast. It's not real volatile, but it's just a steady uptrend all the way up, and it just continues to bounce off the trend line until you get a break, and then you get one leg up. You actually get two legs up and a little bit of a correction, then another, but this looks like one leg and then a second leg. And then we kind of sold off in the afternoon. It's unfortunate. There's a nice second entry. This is a little after 2 o'clock, but if you'd caught this was a nice move up. I mean, it's just a steady trend right up there. I don't like trading this time of day, but you can see that trend line working all the way up, and you could have stayed on this just till you got one break, if nothing else, and you could have gotten just about that whole move right there. So this was a nice move, and you can see that trend line price is working straight off of it. And notice you got a new high there, then a first entry, and there's a second entry right there off this real bullish bar, and it actually went lower and turned and went out the other side. So that's a possibility, although this bar closed at well, I thought it told on here what. Oh yeah, it closed at 229. So that's almost 230. That's a little late. I don't think I'd enter that trade there, but that is a nice second entry. Um, and there is a little bit of a secondary trend line working up through here as well. You can see that working up through there. I don't think you probably want to play that secondary trend, but it is there. So you can see that, and looks like there's a line in here, like so. So there's definitely a secondary trend line right there that you could have played this afternoon, and that would have been the first break of it on a nice second entry. So it's something to think about. If you'd had a good signal bar here, this might have been a trade you'd consider off this secondary trend line, but then you don't get one to here. But that's long right into that. You see where that upper line is. That is pretty much the highs of the day right there. And so you can see it coming on across there. So really this was almost a range day today. Everything traded the entire day, really traded inside, except for a little failed break here, inside the trading range. But this is just this trend is too consistent and too long not to trade this trend. So in the bigger picture, this is just a range day. If you back way out, it's just a range day. Prices did trade up all day, but we never got outside until after 2 o'clock. Actually, I guess you could really say this is a trend day. It's all uphill, but for 90% of the day, we traded inside the overnight highs and lows. So you can just see there's been consistent resistance right along that line. It acted as support a little bit and resistance. And it's been acting more as resistance than anything until today. We got a little bit outside of that. We actually broke higher in all of these. So we maybe we'll break higher from here. I mean, you see how close we were over here. I think this day we made all-time highs, I believe. You can see we were trading around that 3,000 mark. It's just crazy. This market just keeps climbing. Remember, we were talking about a sell-off a few weeks back, and I tried to tell, I told everybody then, anytime you see a big sell-off, it almost always turns out to be a great buying opportunity, and that just continues to hold true. Eventually, one day it won't be, but the odds right now are every time we have a sell-off, it's just nothing but a great buying opportunity. So anyway, let's talk about the trades. It won't take long. There's not many today. Like I said, they're all fairly easy to find if you just played it off these first couple of swings here. And you can see when you drag it up the top, notice that gap where it gaps over there. Anytime you see those gaps over your trend lines and your trend channel lines and even your EMA, you know they're in the right place. Of course, you can't really move your EMA, but you'll see those gaps over the EMA. But more often than not, you'll see them over trend line. See, there's one right there. closed on it, then it gaps over it, and there's a gap in there between those two bars. In other words, those two bars don't overlap. It closes on its low, and then this one opens on its high, and it never trades back above its high, so there's a little gap right there. In other words, notice how all these bars overlap some. Each one overlaps, but these two don't. There's a gap right there. But for the most part, every bar will overlap until you see those little gaps, and you'll see them from time to time. And generally they will gap over trend lines and trend channel lines and mid lines and things like that. So just keep that in mind. But anyway, let's talk about the trades. 7 o'clock came in this little trading range. This would have been kind of tempting to go short, but you got to go short right back into this range support here. We actually broke lower, and it's tempting to want to go long there. I can't remember exactly. I was at 752. It's tempting to go long there, but you just don't have much room back there. And you didn't really have a trend line yet. Really, the only trend line you have was this short-term one. So I wasn't crazy about going long there just because you don't have much room. And you sure don't want to go short, but when it breaks lower and fails and gives you this nice little bullish bar on a second entry, notice that high pullback first entry. So you got two measured legs down. It's a second entry long right there. You could almost argue for that one to be blue. What I'd probably want to do here, since everything is below the EMA and we had been in a downtrend, I'd want to wait on a higher low, which comes right here. And so that's where I think you're better off to go long when it right here. But this one's very tempting. And the only problem is you may trade back to the EMA and turn down again. And notice that's what it does, but it breaks lower only one tick or so, and then it turns. And when it breaks above that, it takes off. Everybody realizes they've been fooled, and boom, off it goes. So that was, if you caught this one trade, you caught a runner today, and you could have ridden this all the way. I probably would not ride this much past where it broke this trend line here and turned back down. But you know, if you'd have hung on, you could have ridden this out all day. But it does come back to the trend line again. And notice what happens. You got a new low here. Then you get a first entry, and then you get a second entry. So the minute it breaks higher, you got a failure on a failed second entry short, and that was above that bar right there. So when it broke higher right there, I actually marked this bar too. You really could have done this either way. When it broke higher here, once it made another lower high and then broke high above that bar right there, that's where I definitely would have got in there. So you really could have entered on either one of those break higher. And then of course we shoot off again, and you pull back here. This is really a new low, so a first entry, and then you get a second entry here. So the minute it breaks higher, it's really a failure, and that was on this bar. So you could have gone long right there again. I wasn't crazy about this one. This one is off the key entry point, so that's another possibility. You could make that one green, but I'd kind of wait and see if you get another more bullish bar like this, and you actually get this here. It actually breaks lower below that big, let me back out a little, below that big bearish bar, and it traps the shorts, and off it goes, and it turns and goes back up the other side and goes out. That's the place to go long for sure if you weren't already in here. So, and it runs up here and comes back again. Normally I'd want to wait on the second entry, but this trend's been just going higher and higher all day long, and you still got a little bit of room. We did fill the gap right there. Notice how we filled the gap to the tick, because the gap is between this yellow line and here, and that's what you had to figure our first target was. But we haven't had any break of this trend line, and you know, we actually touched it here, went a little higher, and came back right here. And the way I looked at this one is this is really a double bottom right here. Even though this low is a little bit higher, I'd still call that a double bottom. It looks like one. So you get a first entry, and then you get a second entry. So there's a second entry short right there that bounces right off the trend line, and look how bullish that bar is. I wouldn't want to go long way up here, but what I'd probably do is when it broke above this bar, and was trading up in here, I'd probably drop me a limit order back here and see if it'd come back and get you. I don't know if it would have or not. You could have actually just put a buy stop there, but that's a little more dangerous. You know, once it's trading way up here, uh, several ticks above, if it backs up enough to feel you where it would have been one tick above that, I wouldn't have any problem putting a limit order in there and trying that with it being right off that trend line. But if you wait on the second entry, you just don't get one. You know, you get another first entry right here because you made another new high, and then you get a second entry here, but you're not back to the trend line yet, and you see you would have gotten burned right there. And then finally you get another move here, but notice that's a new high, first entry. So when it broke above this bar, it's a second entry. That's a very neutral bar, and there is a lot of overlap there, but every time we've come back to this trend line, everything has gone higher. So what you might do is when this bar here broke above this one, you might have dropped a limit order in here to get a real, try to get a real low risk entry with only a couple of ticks in it, and you could have. You see where it closed right where that one did, and take it, but it's kind of risky. I'd probably skip it. But if you know if you wanted to play around and see if you could get a real low risk entry with only one or two ticks in it, you might have been able to do that there, and you're not risking a whole lot. And of course your stop would have to go under this bar because that's your lowest part of the swing, although your entry would have been determined somewhat on that bar. And then of course now you're right into these highs of the day, the overnight highs and all, and you don't want to go long into that. And I really don't think you want to get short yet either, because it's been all uphill and it looks like we may have a flatter trend here too. So, but you just really don't get any more good entries here because everything is to the upside and you just don't get a lot of room, and it's not worth risking it. This would have been the only one I would have considered. But look how neutral that bar is. There's a higher low here, but now you're right back into the highs, and then you get another chance here again, right back into the highs, and you know, you don't really get another shot at it until it's after 2 o'clock, and that would have been the entry right there, and you see what happened. So yeah, there's not a lot of trades here today, but this is very straightforward. It's a very obvious trend. You can see it fitting off this side with one little overshoot right there. A lot of times an overshoot will lead to a reversal, but that's real early in the day. And so I wouldn't worry too much about that one overshoot if we just keep bouncing off that trend line. Notice you did have what looked like a break here and a new high as well, but I wouldn't worry so much about that. This thing played out all day long. And same thing, it played off of the upper side all day long as well for the most part. Well, till we flattened out and finally got a break and went sideways here. So anyway, you know, it's just kind of quiet right now. It's still, you know, we're just coming off a long holiday weekend, and it's probably going to be this way into the fall. That's generally the way it is. Around September is when it usually picks up again, and kind of you start to get the market starts to move a little bit. And really at these highs, you know, all-time highs here are just a few points off all-time highs. You got to be real careful because, you know, we could keep, you know, it's not that we can't keep going higher, but generally when you break through these century areas, you know, breaking through 3,000, we're going to test that area from both sides multiple times most likely before we push on. That's usually the way it works. It may only be a few times or it may be a dozen times, but you're going to test that area, and a lot of times you'll sell back off a little bit and go sideways a little bit and then test that high again. So just be careful trading at these highs, especially going long into all-time highs, almost highs of the day and stuff like that. That's never a good idea, so be real careful with that. But anyway, there's just not much else to say about today. Like I said, it's a very straightforward day. You just want to look for second entries and any reason to get long off this key entry point, which is the trend line and the EMA matching up with it. You know, you can see we pushed through the EMA just barely a few times. But for the most part, all your price action is above the EMA and bouncing off a trend line that's, you know, at almost a 45-degree angle, which is a good, healthy trend. So it's a that may be a little flatter, but that's, that's close to 45 degrees. So that's close enough to in trading anyway, because so, a lot of times close is close enough when you're trading. If it looks like, and if it looks like a duck and it walks like a duck, it's probably a duck, the old saying. And that's more true in trading than a lot of other areas too. So that's just the way trading is. Nothing's 100%, and if it looks like something, it probably is going to work like something. So anyway, I'm going to wrap it up. I'm done for today. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.